Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the markets, we got SPY with a pretty solid pullback day on Friday, and it's actually the most bearish day we have seen since the bulls broke that 4-hour equilibrium that we were watching back here at the end of June. So it does stand out for that fact, and it was the tech sector that was leading the way to weakness. We certainly had a mixed reaction in earnings for the major tech sector names. We've got Apple still to come, but it was the big time 20% drop on Facebook without a very significant bounce. Not even comparable to the bounce that Netflix had when it dumped. And then we had Twitter dumping 20%. So there's definitely a little bit of uneasiness for the bulls in the tech sector, but the market didn't dump because the financial sector held on. And we'll look at all of those sectors combined individually combined. So SPY on the daily time frame, we still have the higher low pattern. That's the step number one for the bears to prove anything for me is to break 279.06. So that's the level on watch for next week. We're pulling back. Definitely could break that level, and if we do, we then zoom out to the weekly time frame and say, okay, we have a bearish reversal, spinning top candlestick with an upper wick of profit taking, and if we start to pull back, we're going to look for the bulls to have to maintain higher lows and hold the weekly higher low of 268.49. So once this consolidation begins, if we lose this daily higher low pattern this week, we're going to be looking for signs like, is the bear volume increasing? Are we seeing both the tech sector and the financial sector going down at the same time? These are ways that I'm going to gauge whether the bulls will be able to maintain this weekly uptrend, which all signs still point to the ability to hold that level unless we see things change and things get more and more bearish. IWM on the daily chart also started pulling back. Well, actually, it started pulling back a couple days ago, and the bulls were barely able to hold on to the support, and now we've lost it with a lower high and lower low. And you can see the 2 out of the last 4 days, that bear volume is significantly high compared to the bull volume. So currently support is down at 164.79, and it's the same thing. We still had a daily higher low pattern. On Friday, we have now lost the daily higher low pattern, so we zoom out to the weekly, and we say, all right, what level do the bulls need to hold on the weekly to maintain the uptrend? It's 161.67. As long as that level holds, the weekly uptrend is intact. If we lose that level, that will be notable. And I'm watching XBI because the biotech and healthcare sectors are pretty heavily weighted in IWM. But look at XBI on this weekly time frame. We have the all-time high, low of consolidation, double top at the all-time high essentially, and now we're looking at that support of 91.91. If that level breaks, we're likely to see the IWM chart lose its weekly upper, or I should say its weekly higher low pattern, just like XBI and the biotech sector might lose this pattern as well. Those are key support levels to be watching. QQQ on the daily lost its higher low pattern because it was bearing the brunt of the bear force. I'm full of them this morning. And we've got support of 177.74 that broke, so we lost the daily higher low. And we're now looking down. There's a little gap down here at 175.74. So that's a potential next target to be looking at. Now that the daily higher low pattern has been lost on increasing bear volume, we zoom out to the weekly and we say, okay, weekly bearish reversal candlestick. Can the bulls maintain the higher low pattern and hold 169.17 to keep the longer term trend in an uptrend? If not, it's going to be the first time we've seen weakness on this weekly time frame since back to start the year, really February, March. So still a few weeks likely until we see key tests of these supports. Even if the bears keep their control for the next couple of weeks, there's a lot of space to be working with. So 177.62, and that support's down in the 169s. So it's multiple percent away. We would have to see 4% to the downside in order to break that level. XLF, the financial sector. So here it is holding up just fine, even though we had a very bearish day with the tech sector on Friday. So there's no red flags whatsoever here, but we're also at a critical juncture for the financial sector. Look at the weekly chart. So the weekly chart is trying to change this trend and break the lower highs. The last lower high is 28.38, 28.15, and here we are just breaking the weekly lower highs. So this is the start of a potential trend change, and if we give ourselves a higher low and a higher high on this weekly chart, or if we just keep going without needing to consolidate and get a bull MACD cross, that's going to be notable, and that's going to take a lot of the weight of the market bulls off of the tech sector, because the financial sector will have the bulls back and will be holding up just fine if we change this trend and confirm that follow through. Also interesting to note that the financial sector the monthly chart is a bull flag with these 5 months healthy consolidation, declining volume, and now the bulls are trying to show back up. And it's also the exact same pattern if you overlay the Bitcoin chart with the financial sector on the monthly time frame. Those charts are ideally or are almost identical if you look at the log version. So check that out if you're interested in that. VIX bulls had a big day on Friday. So we were watching TVIX and the potential setup for the double bottom and the double top on the hourly time frame, and it ended up playing really nicely. And I was at lunch when this break happened, so I didn't make the trade, but highlighted it on Thursday for the potential trade setup, and I was going to be watching it, but my stomach interfered. So we had a double low on the hourly, 35.20, 35.23, double top up at 36.88 and 36.86, and as soon as we broke that level, bulls saw big time follow through. And you can see if you got in on that break, it was pretty much huge gains very quickly. We're talking 45 minutes, and the price went from the 36.88 break all the way up to 39.85. So almost a 10% move in less than an hour. So very significant, and hopefully some people were able to capitalize on that. But VIX on the daily time frame, upper wick of profit taking. We did hold support down in the 1150 range, and now we have broken the lower highs. So the bulls are going to have to see follow through. We're going to have to see hourly higher lows and higher highs continue in order for VIX to try and shift its momentum back into the mid or upper teens. So that's what we're keeping an eye on in the market. A lot of converging roads here. Daily higher lows, some of them being lost already. Weekly higher lows on watch. Financial sector testing key resistance, trying to change the longer term trend. And we do have Apple earnings coming up to be watching as another potential impact on the tech sector. Thanks again. Hope you have a good weekend.